Okay, hello everybody. Welcome to this first episode of our chart analysis series. It's a series that is dedicated to just analyzing of our charts, right? So we're not going to really be talking about much here. We're just going to be talking about chart analysis, why we think something is happening, our rationale for thinking something is going to happen, and then positioning to make the most out of that move. That's all we're going to be doing on this series. I believe there'll be subsequent series to talk about, forex terms, how our ideas on how things work personally. There will be a section for all of that, but now we're just going to be focusing on analysis of the chart, right? So our first chart for the day is going to be GBPUSD, right? And today's date is 2nd of April. This is 2nd of April, and today is a Thursday. Tomorrow is going to be Friday, Good Friday, and I think there's going to be a holiday tomorrow on the market, so there will necessarily not be anything much to do. So what we're going to basically be doing is, just seeing what the chart has done over time and what we expect it to do in the nearest future, right? So on GBPUSD right now, this is what we have. As you can see, these are charts. I hope you can see my screen. These are charts on the monthly time frame. Now, don't get so scared. The monthly time frame is basically a time frame for just getting direction of markets, of getting a what you call an overhead direction, an eagle eye perspective, an eagle eye point of view. It's like scaling up to see exactly what the market is doing from a very broad perspective, so you know how to systematically, strategically position for each move, right? So that's what we'll just be doing on the monthly time frame. And on the monthly time frame, it's clear that we're on a downtrend, right? As you can see, we're on a downtrend because we've had this high here, we've had a low here, we've had a lower high, and we're having a lower low, and so on and so forth, with our lowest low being this point right here, right? So that's the point of our lower low. So basically on the monthly time frame, we have a downtrend. That's the biggest thing we're here to identify. We are on a downtrend on the monthly time frame. So now we scale down to the weekly time frame to see what's going on there. And on the weekly time frame, this is what we have. If you zoom in, right, if you zoom out, you see that trend on the monthly time frame is also still very visible here. It's a downtrend on the weekly as well. But if you zoom in further on the weekly time frame, yes, this is what you have on the weekly time frame, right? Now, I believe we're already accustomed to the fact that on the weekly time frame, a zone there is usually a very strong zone, and we'd expect it to hold, you know, in subsequent sessions, right? If a zone holds on the weekly time frame for a first time, we're expecting it to hold subsequently on other sessions. Now on this weekly time frame, if you are noticing, this happens to be a zone, right? Let me mark it out with this line. Now there happens to be what you'd call a zone right here on the weekly time frame. Let me further mark it with this rectangular tool so it becomes more visible, since I'm calling it a zone, right? Now on this weekly time frame, there seems to be a resistance here, a zone that's acting as a resistance, and it's a major one at that because it's happening on the weekly time frame. Don't forget, when I say on the weekly time frame, it means each and every candlestick you're seeing here was formed during the duration of an entire week, right? So that's 5 market days, or 5 working days as you like to call it, not calendar days, because these are forex pairs. Forex don't trade during the weekends. Now, on the weekly time frame, as we've established, there's a zone here, and before we ever get into that zone, you can see that we are on this current uptrend that is about to rally back into this zone that has been holding over the past couple of months now. It has been holding since, March 18th, 2018, on Monday, 26 March 2018. That's when the zone has been holding. So you can see it's a very long time. So honestly, we're not even expecting this zone to break right now. Although in the market there's nothing that's impossible. It's a matter of observing what the market is doing and going along with the flow. Right now, there's a zone here that we're not expecting to break through, but even if we do, no problem. But on the weekly time frame right now, we are currently on an uptrend because remember, this is the low we identified on the monthly, and since that low, all we've been having has been higher highs that broke this, a high that broke this last previous high here. So we've had this high, and then a higher low, a higher high, a higher low that doesn't go below the last previous low, and then from here we have this sweep that took out this last high, and then a low that hasn't taken out the previous low. So we are continuously experiencing a series of higher highs and higher lows and higher highs and higher lows and higher highs, and just like that, which means we are on an uptrend. Now, on an uptrend, what do you want to do? You just want to buy. You don't want to sell on an uptrend, right? So on the monthly time frame, remember we just got a general overview of the market, and that told us the market was on a downtrend. And then on the weekly time frame, we were able to map out our major resistance zone, right? So when price rallies back into this zone, we're expecting price to, drop down to the downside, to go back to the downside, which is majorly what we're here to do on the weekly time frame. Mark out relevant zones, because whatever zone you mark out on the weekly time frame is most likely going to hold. Now from the weekly time frame, we go down to the daily time frame. And what do we have on the daily time frame? If you zoom out a little bit, this is what we have, right? So on the daily time frame, of course, we're going to have an uptrend too. Now, I said an uptrend because, as you can see, what we are having here is a series of higher highs and higher lows and higher highs, higher lows, higher highs. Although at this point, it has taken out this low, so this can now be regarded as the last low, but it has further gone to give us a higher high, right? Now this higher high is on a retracement that hasn't yet taken out the previous low. So you can see why I said we're on an uptrend, because this low hasn't been taken out yet. When this low is taken out, then we can now confirm that we have changed trend direction and we are now on a downtrend. But for now, we're still on an uptrend until this low is taken out, right? So on the daily time frame, we are on an uptrend, although what we're having now seems to be like a bit of a consolidation, but on a higher time frame. So this consolidation, there are trends to be caught on this consolidation, but basically, generally, we're still on an uptrend, with this being the lowest point of this uptrend. So this will be the point we'll be watching out to see if we can break through. If we break through this point with a candle body, not a wick, if we can go beyond this point with a body, then we'll know that we have changed trend, and so we'll just be positioning to maximize the most out of the new trend that will be forming by then, right? So on the daily time frame, this is what we have. From this point, we've gone higher, right? Let me mark out the last previous high. This is the last previous high, and we've gone higher than our last previous high on the daily time frame, which happens to be this. We closed above it with a candle body. Now we're on this retracement for now. So what we're expecting now is to wait for any further confirmation for the uptrend. Once we've confirmed that our uptrend is about to resume, we jump on it, and then we look forward to taking our profits at this point here that happens to be the major resistance on the weekly level, right? So yes, now on this daily time, from the daily time frame, we're going to be scaling down to the 4 hour, which is a much more smaller time frame compared to where we're coming from. Now on the 4 hour, what are we seeing here? It's entirely an entirely different trend. On the 4 hour, we can see that we're you can see that we're on a downtrend, because we had this point here, which happens to be the highest point, and then we've had this low, a lower low, we've had a lower high here, a lower low, a lower high here, a lower low, and that's how we've been continuing, right? So on the 4 hour, we are on a downtrend, means GBPUSD is going down on the 4 hour, right? So mapping out the lowest zone right now on GBPUSD, this will be it, right? So we're looking forward now to breaking this point on the GBPUSD 4 hour time frame, so that we can continue our trend back, so that we can continue to ride the trend down, right? Now on the 4 hour, don't forget this line here is the line we drew as the point to be broken, or before we can confirm that we are now on a downtrend. So this will be the level we'll be watching out for, any form of rejection or retracement or whatever it is we're going to be watching out for, right? So at this point we'll be vigilant, but right now we're on a downtrend on the 4 hour. So if we are going to do anything on the charts, this will be where we'll start looking forward to taking entries. And now, what are the confluences we hope to see before we get on any trade, right? As an SMC trader, what we look forward to is our order block, and then an impulsive move that leaves a fair value gap behind, right? And then we look for liquidity that has to be swept before tapping into the order block and then dishing out the move we want, right? So now, if those are confluences on the 4 hour time frame, this is the last candle that dished out the last impulsive move, right? So we're going to be marking that out as what is going to be our order block. Although this move is still incomplete, right? Because it hasn't yet given out a break of structure, right? It has to break the structure to tell us that it has to break the structure with a body, not a wick, remember? So there has to be a break of structure to the downside, and then it has to give us what we like to consider as liquidity that has to be swept before tapping into this order block over here. So on the 4 hour time frame, this is what we'll be looking out for. We'll be waiting for, because right now we're on a downtrend, right? Remember, on the 4 hour we're on a downtrend, so we'll be waiting for a tap into this zone so that we can now, I'm coming, let me get that tool. Yes, so now from this point we'll be expecting to see something like this, something that will give us a break below this support, and then come back here, give us liquidity zones, first, second, third, as many as it would want to give, and then break below the liquidity into the order block, right? So at the tap, as soon as we tap into this order block, we now expect a full reversal to the downside, towards our direction, to give us the desired move we want, right? So this is exactly something, this is a picture of what, sorry, my illustration might seem a bit rough, but this is something we'll be looking forward to. So let me get out of the screen. But currently, it is not a trade that is feasible right now because there is no break of structure to the downside yet, and there's no liquidity that has been built, so it's still a trade that is open. But we can further scale down to the 1 hour just to see what's going on there. And as you can see on the 1 hour, this is the zone that we marked, exactly the zone we marked, which, and you see it doesn't even need any further refining, because as you can see, it has mapped out this entire zone here. So yes, we'll just be waiting for a break of structure to the downside before we'll be able to jump on that trade. So yes, I think that's going to be that for GBP USD. So in the coming weeks, most likely after the holidays, the Easter break, the Good Friday and Easter Sunday, and probably a Monday for rest, would know exactly what the markets will do, right? So disclaimer, guys, this is just a video of what I think is going on in the charts. A it's not an avenue to start to take blind risks, right? So even after our analysis like this, it's proper for you to go back, do your own analysis of the charts, and be sure of the trade you are going into before you risk real money, because marketplace is a place that doesn't have pity on you before it takes what you have. If you have $1 million, it can take it in 10 minutes. If you have $10, well, it can also take it. It doesn't really, pity you or your current financial state. So you shouldn't be jumping blindly into trades. Do your analysis, carry out your analysis properly, observe proper risk management. These are some of the things we'll be talking about on this YouTube channel. But yes, that's that for GBP USD. I'll see you on the next one. Bye for now.